Felix here. Is this the Halloween rally or is this the last hurrah before the Fed really tanks markets? Well, we've had a massive change in market positions here from institutions that most people probably won't know about. And I'm going to explain to you exactly what that means. Plus, there is a big factor that may allow the Fed to go a little easier on us. And I also want to run through that. And then there is a huge Zuckerberg rumor. So let's go through these three things. Before we do that, enter the free raffle. You can literally win our key coaching program completely for free. Just go to gotoacademy.org/BF and enter and we will draw this raffle. Winston will draw it on Sunday. So be prepared and enter. Go to academy.org/BF. None of the following, of course, is financial advice. I know that's where you're here for. Or is it the pink scarf? Which one is it? Let me know. Well, let me share with you my screen here. So you might have seen this before from me. So I track quite carefully where institutions are positioning their calls and their puts. So what does it tell us? Well, the call wall has come down from 4,100 to just 4,000. So that's kind of a bit bearish. It just means we're not expecting that exuberant rally. We're just expecting to go up 20 points, something like that. And that's basically our resistance point. When you get to 4,000, people will sell. It's just the way the options market is structured. Now, very big move today, though, on the downside. So we have support. We've had support for the last 2 weeks at 3,600. That support has just moved up from all the way down here to 3,800. So that's a big kind of narrowing of this range. And that's what we're seeing. And it's super important to understand why that's happening. So the CTAs, the guys who buy on technicals, they've bought a lot. They bought like 160 billion in the last month. But they're a little bit out of gas, not because they haven't got any money, but just because the market isn't going anywhere. The market's sort of bobbing sideways here these last few days, and therefore not a lot happening there. They don't get their buy indicators because we're just going sideways. So what does that mean? Well, you get, and I apologize for this language, but zero gamma. Don't need to really fully understand what it means, but basically you're above that line, the market gets calmer, prices stabilize, volatility drops, everything is wonderful, and you get ready for Thanksgiving and you are grateful. You go below 3,952 now, about 20 points below where we are right now as I'm filming this, and the madness hops on again. We get selling pressure, we get volatility going up, all that kind of stuff. So we're in this very narrow range, essentially, between 3,965 and 4,000. That's kind of the band that we're trading in between at the moment. So that means what? No immediate Christmas rally. No, it's a sideways hop, limp, bounce, whatever you want to call it, but it isn't particularly exciting. Now, after you've entered the very exciting raffle, which is much more exciting than the rally, you then want to understand, well, what's actually happening here? What's the Fed going to announce tomorrow? Well, tomorrow is at the minutes of the last meeting. So it's old news, but super important because we get an insight into what was said inside the meetings. What did the Fed presidents agree on? What did they not agree on? How many people wanted to be more dovish? How many people wanted to be more bullish and hawkish? Why is it always birds? I don't know. So that's what we're going to run through tomorrow. So make sure you join me on that live stream. But one of the key things that came out of COVID, nothing to do with COVID, it was just governments going, let's spend some money. It isn't ours. We'll never have to pay it back. And imagine how popular I'll be if I give all this money away. So that's what the government did here. This bubble down here is excess disposable income. Well, excess is a funny term, really, isn't it? I think everybody should have a lot more excess disposable income. Build another income stream, folks. But this is the, above normal. And what we're seeing right now is that income is moving down again. And that's because they've spent the money they got from the government, or they're not receiving any more. They are spending more again because they're traveling to work and so on. At the same time, household debt went nuts. So we've got massive consumer debt here, massive, highest level ever, like since the 1980s, massive amount. 1,750 billion or 1.75 trillion for you trillionaires out there. So that's huge. And what does that mean? Well, this is the Fed's way of getting us because they know they keep squeezing that interest lever harder and harder. all those consumer loans, the car loans, all that stuff, the home loans, eventually they get refinanced at much higher rates. It squeezes us, and therefore we've got less money to spend unless you got an income stream from trading like me, in which case, you're fine. But if you're working on a salary, basically your income is getting eroded by inflation and your expenses go up. So this is what they're counting on to give us the recession. So this is I hate this phrase, excess savings. It's so wrong. There should never be a word excess savings. It's horrid because, of course, you should have so many savings that it's excessive. So get rid of that word. But essentially what we're seeing is here, it's coming down, and the predictions are that these savings levels are going to come down very, very, very steeply as people get eroded on their income, and their debt expenditure basically goes up and up and up and up. And if they get this back down to 2020 levels, all about $2.3 trillion of it that the government dished out for a particular reason, we would basically be over the hump, and they would have, to some extent, undone all the money printing, or at least covered up the money printing idiocy, the 40% extra dollars in circulation. And that's essentially where they're heading. So what can we do about that? Well, it causes volatility, all the stuff that's going to happen here. So my reading on that, I'll give you the summary here just in a second, but if you want to learn more about how we make money in these environments, and yes, this very year, we made 131% returns. If you've watched me since the very beginning of the year and copied every trade I'd done, which I strongly discourage, then you would have made the same returns. Why do I discourage that? Because it's kind of pointless. You want to learn how I do it rather than copy, because I might lose my marbles tomorrow. I might lose my marbles this afternoon, in fact. So I used to have one of these marble board games. I lost all the marbles. Why? Because I've got cats, and they thought they were great toys, and they all disappeared under sofas, inside sofas. I don't know where they all went. I was left with 3 marbles at the end. If you know the game I'm talking about, 3 marbles don't get you very far. But apart from marbles, you can join our program. Go to felixfriends.org/coaching. Provided you have a 5-figure portfolio and you get access directly to me, you get access to my incredible coaching team. And if you're not quite there yet at 5 figures, or 6 or 7 or 8 or 9, so if you had the 4 figures, say, then you're starting out, join us at felixfriends.org/options. It's a pre-recorded program. You get to see me trade live every single week. Yup, live. You also get access to the full trading protocol, absolutely everything, nothing held back. Write down the coupon code guarantee here. That gets you 41% off. Why? Because, well, we are in the Black Friday spirit, the BF spirit. So enjoy your holidays and get cracking, get learning, get building that income stream. Make this year a cracker. Now, what's happening here? Why is the positioning the way it is, as I showed you at the beginning here? Where did all the exuberance go? Didn't you tell us 2 weeks ago that you thought everything was going to the moon? Yeah, and it has. They bought about $150 billion, it's the biggest pen in the world, of CTA money, essentially. So the CTAs, what happens now? Well, if you get a 2 standard deviation move up, apologies for the strange language, basically, market goes up significantly, you get about 50 billion buy-in. So that's important to understand. So we go up a lot, we get plus $50 billion into the market of buying. If we go down by a similar amount, 2 standard deviations, what do we get? We get minus 150 billion in sales by these very CTA funds. So what does that mean? It means the way we're set up, the risk is suddenly to the downside, no longer to the upside. So what does that mean? Well, be a little bit cautious about it. Don't go nuts. Tomorrow is a major macro event. Tomorrow is the one thing that could turn this around. If they come out more soft and fluffy and more bearish on the economy, then we're going to go up like a rocket ship. If they are holding the line of, we need more unemployed people, we need to destroy the economy, we need to get savings out of the consumer, and we will hold interest rates up and up and up and up and up until we've done that, then I'd say we are, the downside scenario is kind of here. What does this downside scenario also mean? It means you get higher volatility. What does higher volatility mean? It means traders make more money. Very, very simple. We trade volatility. We don't trade straight stock prices. It might sound confusing, but it allows us to make trades with an 80% probability. And that's how we've made the money that we've made so far this year. Not because we were right on the direction of stocks, because no one ever is. It's 50-50. No one's got any idea unless you're paying someone on the inside, which might land you in a federal penitentiary. Is that the word? So don't do that. there we are. That's kind of the roundup here of how I see markets heading into the holidays. Of course, it's a hugely important day with the FOMC minutes tomorrow. That's a whopper. It's not actually just the FOMC meetings. We're also getting a ton of data out tomorrow. We're getting jobless claims. We're getting durable goods, jobless claims, orders, manufacturing data, home sales, consumer sentiment. It's all timed on the same day just to make your pre-holiday day a little bit more exciting. So watch me for that. Join me on that. And of course, don't forget to join Winston's raffle. You could win something really juicy. And I'm not talking about cucumbers. He really likes cucumbers. Thanks very much for watching. See you on the next one.